All right, thank you all for the opportunity to be here to talk about Farm Bill. I'd also like to acknowledge some of my colleagues in the room, like Dr. Fletcher, Dr. Liu, and Dr. Munisani, who also work in ag policy and do phenomenal work in that area. So I'm going to talk to you a little bit about an update of what's going on with the Farm Bill, as well as a reason for ag policy in the United States, and just some changes that have happened recently. So, just a disclaimer, the following slides are based on my interpretation of language in the legislation, and final rules and guidelines may change as directed by the Secretary of Agriculture. So, just a disclaimer, this is my interpretation and things may change. All right, so why is ag policy important? This is a very busy chart, and I apologize for that. I was actually expecting a bigger backdrop, so it would be easier to see for all of you, but I'm going to try to talk you through it. So we have three things going on the chart dating back to 1995. So this is about 3 decades worth of information. And the bars are looking at cost of production of peanuts on a per acre basis based on the USDA actual cost of production data. The yellow line at top is the value of production, and then the red line at the bottom is the value of production less the total cost. The green little U's, I guess is one way to describe them, show periods over the last 30 years when we actually had a positive value over the total cost. So that's when the value of production exceeded the total cost. And you can count those. There's about 8 times over the last 3 decades where that happened. At the top, I have dates of when farm bills were signed into law, just so you can have an idea of when those were occurring. So 1996, 2002, 2008, 2014, and 2018, and kind of the time of year when that happened. One thing to look at is how costs have changed over that time period, and I'm sorry I can't really point to you, but of most import is actually thinking back to 2018. So 2018 was the most recent farm bill that was signed into legislation prior to this year, and cost of production was where it's at, you can see on the slides. And then we had the COVID pandemic, and costs went down a little bit, but when the world woke up and came out of it, demand for commodities went up, demand for inputs went up, and we saw cost of production go up. And then we had inflation increase as well. Since that time period, cost of production has come down just a little bit, but it still remains elevated. And then commodity prices, we did see those peak a little bit, like that 22 time period, but then they've come down the past few years as well. So the current economic situation now with the elevated cost of production is very different than what the economic situation looked like in 2018. All right, so showing why ag policy is important. All right, so thinking back the past 3 decades, we've had 8 periods where, for peanut producers, and this is for Georgia and Alabama farmers specifically, and again, based only on USDA's actual cost of production data. Only 8 periods where they saw a positive value of production less total costs. Now, in other years, there were like some rotational crops, cotton or corn, where like in the lost years for peanuts, we actually saw profits in the rotational crops. And so that's why we see farms diversified in terms of their production. We see farms in Georgia not just planting peanuts, obviously being mindful of crop rotation, but they're planting cotton, corn, they have livestock, poultry, and that's, again, spreading that risk out and helping them stay in business for the long run. But other issues to think about is that farmers, when they are producing their biological crop, right? It takes time to grow. So they're planting the seed, they're putting in the inputs, the chemicals, pesticides, any things like that, fertilizers. For some, those are costs that they're having to pay. But maybe something happens in terms of the market, like maybe there's some trade issues or non-tariff trade barriers that are put into place that say, oh, if you spray this particular chemical, we're not going to import these peanuts. That makes it really difficult for agricultural producers to pivot and make a change. And so producers in agriculture rely on the Farm Bill and government programs as a safety net because they can't pivot as quickly and make changes to their operations. Also, there's several things out of their control, like the weather, and that's very obvious, and things like that. Also mentioning, another reason that we see, looking at the census of agriculture, farms are getting bigger. A lot of that is because purchasing bigger equipment to be more efficient and obtaining economies of scale. So once you do that, again, it's hard to pivot. So if you've invested $1 million into your peanut harvest equipment with a digger and a picker, then it's hard to pivot and say, well, we're not going to grow peanuts anymore. We've already invested in that equipment. We need to use it and get a good return on our asset. And so ag policy, the purpose of it is designed to create a safety net for producers so they can stay in production and we can have security of food and fiber in the United States. So what's going on with peanuts? You've already heard some speakers talk a little bit about what's going on with peanuts, and I've talked a little bit about some things, but cost of production remains elevated. We have seen it come down a little bit, but interest rates remain high, fertilizer prices are coming back up, and we just haven't seen those prices come down like we have commodity prices. Also, production is up, not just in, you hear all over the news about corn and soybeans, record production. We're also expecting to see a large production of peanuts, and I think Dr. Montfort is going to talk about that later. From a demand standpoint, so, talking about supply, talking about demand, demand is relatively flat. We're not seeing like a big shift in increase in consumption or anything like that. We're seeing growth in demand as population grows, and so on. And some of the trade issues that we've had have led to export demand being down. So that means the outlook for prices is bearish. So there's not an outlook for prices to really come up anytime soon, barring some unseen event. And so narrow to negative margins means that there's a greater need for a safety net. Last year, word got out that things were difficult in the ag economy, with, again, tight margins, negative margins in some situations, especially on land that's rented. And so the government said, okay, in December of 2024, they signed in some legislation to do some emergency financial assistance as well as some disaster assistance for growers. And so you can see this chart here. This is from the Economic Research Service, showing how in 2025, net farm income is actually going to go up after seeing several years of decline. And that's because of government payments. You can see that gray bar there at the far bottom right chart. That's all government payments. So emergency disaster assistance, EFAP, is also part of that. And again, indicating the importance of a farm safety net for producers and the importance of ag policy. So what happened with the Farm Bill? So the 2018 Farm Bill expired 2 times, and each time they extended it for a year. And so we're like, ooh, we've got a new Farm Bill, but actually we don't really have a new Farm Bill. So this year we had a unique situation. There was a continuing resolution that was passed into law, and there were several agricultural provisions that were updated that were Farm Bill specific programs through what is called the One Big Beautiful Bill Act, the OBBBA. And that was signed into law July 4th, 2025. And it renewed several programs that were agricultural provisions and updated several programs that were in the Farm Bill. but it wasn't the specific Farm Bill process where the House creates a version, the Senate creates a version, they go to conference, and then they go back separate and all the other stuff. So they figured out how to a way to help agricultural producers through that passing of the continuing resolution. Debate is still ongoing for a skinny Farm Bill, and that is to address some of the programs that were not updated in the OBBBA. All right, so thinking about the audience and realizing that not everyone in here is an agricultural producer, I wanted to give like a more basic information about the Farm Bill programs and how they work. So one of the things that's a little bit abstract for those that are not in production agriculture is the concept of base acres. And base acres are on farms that have covered commodities, or farms that have covered commodities and have base acres. They can be eligible for participation in government programs and payments if they're triggered. So the Farm Bill safety net uses base acres to indicate who gets payments or not. And the interesting thing about base acres is that they are what we call decoupled from planting decisions. So a farm that has base acres, if a payment is triggered for low prices or a loss in revenue, regardless of what is planted, a payment can occur on a portion of the base acres, which is 85% of those base acres. So that the ag policy does not influence what is planted. So, and that keeps us in compliance with trade with other countries and things like that. So we call that decoupled. Talking a little bit about, so if a payment is triggered by low prices or low revenue, then a payment will occur on those base acres and just a portion of those base acres, regardless of what is planted. And base acres have been basically established based on historical planting of acres on those farms. There was an update in the previous Farm Bill back in 2014. Stanley, I might be wrong on that. 2014, there was an update to reallocate base acres based on historical plantings. And then what has been changed with the OBBBA is that there's an allowance for producers to increase base acres. And this is the first time this has happened in a very, very long time. So for producers that planted crops 2019 through 2023, if they have no base, they can add base to their farm. And for those producers that planted more than the base that they currently have, they could potentially increase the base on their farm. So this allows those to get a safety net that didn't have one before, and for those producers that have had to grow and expand to get a little bit larger safety net. Of course, there's a cap on that, 30 million acres total, and if the demand exceeds that, then there will be a proration in place. There were also updates to the PLC and ARC program. PLC stands for Price Loss Coverage, and ARC is Adjusted Revenue Coverage or Ag Revenue Coverage. I can't remember the A. I always just call them by the acronyms. For ARC and PLC, producers have to elect annually which program they want to choose, whether they want to do price loss coverage or the revenue protection through ARC. And they have to choose that annually, but they weren't able to do that for this year. So for 2025, producers will get the better of ARC or PLC, and then next year they're going to have to elect between the two programs. The previous Farm Bill had the price per ton for peanuts at $5.35 per ton, and it has been updated to $6.35 per ton for peanuts, and that is closer to cost of production. It's still, depending on what numbers you're looking at, is still below cost of production in some situations, but that's certainly going to help growers when prices fall below that. Also, there's an opportunity after 2031 that reference prices will increase by 0.5%. So they can go up to 113% of the statutory reference price for PLC, and then for the ARC program, the revenue guarantee was increased from 86% to 90%, and then the payment based on the benchmark revenue is 10 to 12% of that. And also from a crop insurance standpoint, producers who elect PLC or ARC are now eligible to purchase the SCO or ECO, which are shallow loss coverage crop insurance. All right, and then briefly, before I run out of time, I'm going to talk a little bit about changes to the marketing assistant loans. These are loans that producers can use to place their crop into a loan and hopefully wait for improved prices, because a lot of times at harvest prices tend to be lower because supplies are high, and so it allows them the ability to place their commodity into a loan, and they can choose to exercise that loan or sell later at a different price. The loan rate has been increased from $355 a ton to $390 per ton, and that is happening beginning with the 2026 crop year. As far as payment limits, peanuts will continue to have a separate payment limit, which is good for peanut producers since it is a very capital-intensive crop. And that payment limit has been increased from $125,000 to $155,000. And it can be adjusted for inflation based on the consumer price index as the years proceed. The one big thing that pretty much everyone is saying is a great change as a result of the OBBBA is the ability to consider pass-through entities as eligible. So it's going to reduce the number of tax returns that agricultural operations will have to file. So it's going to make things better from a paperwork standpoint and certainly more efficient for that. There was no changes to the AGI exception, so 75% of AGI is still in place for the adjusted gross income. They did expand the definition of farming, so that includes direct sales to consumers, agritourism operations, and sales of equipment to fall in that farming definition. Also some benefits that are not just specific to agriculture, but certainly help a lot of agricultural producers is the estate tax exemption. That has been moved to $15 million or $30 million for a married couple filed jointly, or $30 million, I'm sorry, for married couples. And then the depreciation for Section 179 as well. Equipment can be depreciated. So for purchases placed this year, so after, as of January 1st, 2025, so even purchases on machinery equipment this year can be depreciated up to $2.5 million for purchases up to $4 million. So those can be depreciated to help lower tax liability. That is basically Farm Bill update in a nutshell.